All right, here we go. MSTR True North, episode 12. Welcome back, everybody. We are back. We are in a new year. It is 2025. We are going to have a really good year. We are going to have a fantastic year, and I'm excited for where things are going to be headed. Happy New Year, everybody. Hope you all had a great time celebrating with your friends, family, and thinking about the prosperity of the future in 2025 and everything on the horizon. I think we've got a lot of things to be thankful for and a lot of things to be happy about moving forward here into 2025. So thank you, everybody that has joined and is joining right now. We've got, it looks like about 1,500 people on the live stream. We are a couple minutes late. We are multiple men down. Ben's got a cold. Adrian's out with the flu. It's that time of year. Everybody's just getting totally knocked out. So we're gonna work through some content. Holy shit! It has been a lot has happened in the last 21 days since our last live stream. A lot of people, the communities have been out of control, like totally out of control. Hold on. I gotta let Tim back in. He dropped out. Where'd he go? There we go. There he's back in. Communities have been absolutely out of control. The price of MicroStrategy has been all over the place. We've had volatility to the upside, volatility to the downside. We've had sentiment flying all over the place. There are certainly bots in the community that are out there trying to spread FUD. There are people that are taking very, leveraged bullish positions. There are people that are shorting the stock. We're seeing new bears come out of the woodworks. Continued massive bewilderment from large financial institutions like the Financial Times, and other publications. Wall Street Journal article came out, and they're obsessed with the type of scotch I'm drinking. So tonight it's actually just Tennessee whiskey, Nelson's Greenbrier. So Wall Street Journal, if you're listening, that's what I got. And yeah, let's talk about some stuff.
Cheers.
Let's talk about some stuff. To those that are new or those that are joining or those that are hopping on and are wondering, like, what is this call? What is this conversation? MSTR True North is a group of people that gets together and we talk about what's going on with the MicroStrategy trade every week, what's happened for, the past 7 days, past 14 days, whatever, to set the background and set the stage. This group of people would have been talking regardless of whether or not the people are here. So our goal is to effectively make this like an investment club where we're having a conversation with each other that we just happen to broadcast externally. So if you don't like what we talk about or we don't hit the things that you want us to hit on, I'm sorry, but I don't really care. Like, these are the things that we want to talk about, and this is just kind of the way we'll take things. That being said, at the end of this conversation, we will have a little bit of time for Q&A. We'll kind of hit on some of those points as well. And we'll go from there. We've got plenty of content to talk through. I think maybe we'll take this hour and a half, 2 hours, and maybe until Ben drops off and decides that his COVID's just hitting too hard, and we'll go from there. So to start, I think we should start with some statistics. I think the irresponsibly long group, irresponsibly long MicroStrategy, which is a complete shit show. I feel like everybody has kind of gone crazy in there. Irresponsibly long MicroStrategy hit 25,000 members this last week. I think it's up to 25 or 26,000 members, which is up, another 1,000 or two. A bit surprising because I know a handful of people have dropped out of irresponsibly long because of the just general noise that's in that community. However, I still really like using and looking at the irresponsibly long MicroStrategy community because anyone that is curious about MicroStrategy from the outside, let's just imagine you're a new person and this is the first time you've heard about Bitcoin or the first time you've heard about what's happening with MicroStrategy. You may hear that there's a conversation happening on X, so you flock to X, right? And then you see that there's this community that's got 25,000 people on it. You're going to get people that are following it to try to figure out like what is going on. So I think it's a really good signal of alpha of like who new is coming to the community and how many more new people are interested in MicroStrategy. You could kind of use it similar to a gauge like Google search, right? If you look at how much something has been searched, it's very, very similar in my mind to that, like the Google search. So I think it's an interesting data point. That being said, there are several communities that kind of split out because of this. I mean, we've got High T MicroStrategy, which I think is hilarious. Fantastic logo, by the way. Like in the MicroStrategy logo, the T's are just really tall. High T MicroStrategy. I think the purpose of those split off communities is to have a little bit more long-term view on the stock. I know within the irresponsibly long community, when the price of the stock fell in the back end of Q4 in December from 400 down to 300, there was a significant amount of blood and bearish noise in the irresponsibly long community, and people hated it. People were whining about the volatility of the most volatile stock in the world. So just something to keep in mind.
Are we doing catalysts?
Yeah, we could talk catalysts. We could talk.
I'll wait for my wait to say my piece until you're done with catalysts.
Okay. Yeah. So really, that's the statistic. Some other statistics that I'm tracking and looking into is trailing 12 months PE ratio. I think it's an interesting data point to look at. That's something that we've been tracking on MSTR Tracker. There's plenty of new data, and we can get into that a little bit later. And then actually one other piece of information and statistic that I wanted to pull up and start with is MicroStrategy's leverage ratio. So we got information that on Monday that MicroStrategy bought another 1,070 Bitcoin. So I like looking at their MicroStrategy's financial leverage and seeing how that's changing over time. So as of January 6th, 2025, 447,000 Bitcoin held. Price of Bitcoin today is 94,700 at the time. Looks like that's still the case. Total assets, 42.3 billion. Total liabilities, 7.5 billion. Liability to asset ratio, 17.9%. Historical average, if you just take the last, 12 months, it's not a weighted average, but it's a good proxy. Historical average around 23%. They ended 2023 with a leverage ratio of 31%. So in taking a simplistic view of this, you could say MicroStrategy may be under leveraged relative to their historical average. And there's some capacity and potential to put on a little bit more debt onto the balance sheet, which could be beneficial to all equity holders. In thinking about an MSTR price is what, 3? I don't know, 3.
Can I hop in there, Jeff?
Yeah,
Can
hop in.
Clarify that this is a liability to asset ratio. This is not total market capitalization. I know a lot of people get that confused and mixed up. Again, this is the ratio to their Bitcoin holdings. And that's really important for people to understand. Like, this does not change with the NAV contraction and expansion. This is simply just the ratio of the leverage as collateralized by their Bitcoin stack.
That's correct. That's correct. And their Bitcoin is not secured, or their debt is not secured by the Bitcoin. So I think that's another good distinction. But to your point, Dan, the very good point. This has nothing to do with market cap. This is just pure looking at their financials, like looking at financial strength of the company. We're looking at an 18% leverage ratio.
Well, and this is risk framework discussion, right? So whenever people look at these types of companies, one of the things that you need to know is that they're all operating within their own risk framework that they've defined internally for themselves. And we've put out quite a few posts before that kind of talks about this, where MicroStrategy is going to operate within a range typically. And that range, I think, is typically going to be 20 to 40% of the fair market value of their Bitcoin is where they're going to be comfortable having a leverage ratio at. And historically, they've flown pretty consistently close to 25%, which is on the lower end of the range, but that's intentional because the range is there to allow fluctuations during bull and bear cycles, right? So if we got into a bear market, when the price of Bitcoin comes down, that leverage ratio climbs up. So having that range available up to 40% allows them that wiggle room for the fluctuations in the market. And the other thing to pay attention to is the ATM kind of becomes a tool to manage that as well. So they can always start using the ATM to add more Bitcoin to the balance sheet to bring the leverage ratio down if they're starting to creep up too quickly towards the high end of the range. But now that we're outside of the range, right, we're below 20, that's when you start to look for the next debt offering, right? And I think that's different than the preferred offering, which I'm sure we'll talk about both, but preferred's a little unique because it can live in two different places on the balance sheet depending on the structure of it. One structure can put it into the liabilities, but another puts it into the equity section. But this is really where I start to look for another convert coming out. And right now, to get them back up to range, they could put out about 3.5 billion in converts to get them back closer to that 25%. So it just frees up a lot of room for them to operate here.
I like how you explain that, Ben. A classic Ben coming in with a great, clear, concise explanation. But if I were to summarize it, they have buffer. They have significant buffer. And that's why I have this row down here, as if Bitcoin price for the assets to exceed the liabilities. Basically, this just shows you how much buffer that they have, right? In order for the assets to be worth the same amount as the total liabilities held on balance sheet, the price of Bitcoin would need to go down to $16,917. I think people that are on this stream would be selling their kidneys and amongst other things in order to be buying Bitcoin at $16,000 again.
Which is still not a liquidation price.
Which is still not a liquidation price.
Exactly. It could go down that far. They're still not liquidated. Nothing has happened, right? There's a lot of people have seen the Sailor clip where he goes, Bitcoin can go down to $1,000 or $1. It doesn't mean we get liquidated, right? So even when you track that price, right, that's kind of their break even is essentially what you're looking at there.
Yep.
But it's not a liquidation price. So please don't read the 16,917 as a price where anything bad happens. It's just a data point.
Just a data point. Exactly. Cool. All right, so I think that's a good update. I will go back to hiding this, and we can hop back in here. And where did Tim go? Oh, Tim's back. There he is. There's Tim. All right, Tim. I think you're getting roasted in the chat for not having a suit and tie on. So I guess feel free to address that. But we need your not financial advice before we go any further. We need you to hit the people.
The orange ties are at the office, so as much as I'd like to say something's at the dry cleaners, it's just, sometimes you gotta put on a different shirt. 2025 may be unbelievable, but please try to restrain yourself from giving anyone financial advice. As Ben Workman says, analysis is a team sport, but investing is an individual sport. So this content is educational, hopefully informative, hopefully entertaining, but it's not financial advice.
I got some financial advice. Your trades get better if you wear some MSTR True North merch.
True North
Just
merch.
saying.
Damn it. I need mine. Well, actually, I got my MSTR True North mug. I ordered the 20-ounce one because I'm like, I like coffee. I drink a lot of coffee. I don't know like size or scale. And then I get this mug and it's like the size of my head. This thing is huge. Like if you get the 20-ounce mug, just letting you know right now, like the thing is enormous, right? It's absolutely enormous. Shout out Hodl Shop, HODL. I think somebody will put it in the chat there. We've raised a decent amount of money from those that have been buying merch. We are still contemplating the exact way we're going to be leveraging and using those funds that are raised. Our goal is to be able to sponsor people coming to MicroStrategy World. It might be one or two people coming to MicroStrategy World. But we got to think through the logistics and exactly what that looks like. So it might be, some other form. It might be additional merch or, other things that we plan in the future. But stay tuned. We will have some exciting news on that front. Also, 2025, just in general, taking a step back out of MicroStrategy, I think 2025 is going to be a fantastic year for Bitcoin. I know the price of Bitcoin has risen significantly. But there's some exciting things on the horizon that I'm personally working on. I know a couple other people are working on some exciting things here on the stream as well. Can't share any of it with you guys at the moment, but I think the next 12 months are going to be really exciting for the development of Bitcoin. So stay tuned. Keep following us. If you don't follow other people on the screen, absolutely do that. A lot of industry events happening in the first couple of quarters. A lot of positive catalysts, and maybe it's time we talk about catalysts for MicroStrategy. A lot of positive catalysts and a lot of market development that can happen in the next 6-8 months. So a lot of fun on the horizon. All right, Soleil, we're going to go over to you because we've got some catalysts to talk about, and I guess you want to hit on some of these, huh?
Well, I'll save my comment for after.
After the catalysts, is it a bomb? Are you dropping a bomb on people or what?
Yeah, get ready for the bombs.
Okay. Wow, I'm trying to zoom here on my screen. It's a little hard. Okay. So thinking about so this is MSTR Moon. This is the catalyst tracker. You come click in here and look at everything that's on the horizon. I think these are interesting days to look at. Again, none of this is financial advice. We're not insinuating that each one of these days is going to result in like price action to the upside. like it's not that we put this catalyst tracker today that means like these are all things that result in rocket of price. All of these catalysts are public information, right? Everybody can trade these. Everybody can front run these. Everybody can sell these. These are buy the news, sell the news, whatever you think it may be. So we do have a catalyst on the horizon next week. This is the January 17th, 2025 historic option expiration. This has been a really interesting event just to track in my mind because I don't think an event has really occurred like it before in history. January 17th, 2025 leaps. These are option contracts. They were available to buyers in September of 2022. So folks that were bullish Bitcoin long-term in September of 2022, when they saw the crash at the FTX and they still had, they still believed in Bitcoin, they had the ability to purchase leaps. So these are long expiration option contracts expiring significantly far away. The price of MicroStrategy when these leaps were announced was like $150, so $15 split adjusted. So the price of MicroStrategy was incredibly low. $15 split adjusted relative to whatever it is now, $330. So there's a significant amount of appreciation that's happened since these options contracts were released. And there were many people that purchased a significant amount of options over 23, over 24 with this option expiration. And they purchased them as far out of the money as they possibly could because they knew that this was an asymmetric trade and that there was significant upside if Bitcoin continued to rally, and understanding that Bitcoin's price has an impact on MicroStrategy price. So why is this historic relative to other option expirations? One, I think people know about Bitcoin much more now than I guess Bitcoin's a unique asset. Like nothing has ever existed like this before, where you've got a corporation that's adopted a fully different asset to manage their treasury. And that asset itself underlying the trade has a 4-year cycle, that is, I don't want to say predictable, but relatively predictable in terms of, watching where it can go into the future. So many people purchase these leaps and thinking about where we are in the capital environment today in 2025, you have no better opportunity of cost of capital than holding on and exercising these leaps. Whereas I think in most scenarios where people are buying leaps far out of the money because they're taking a speculative view on an equity or a stock, they may sell those contracts for alternative investments that may have a better opportunity cost of capital. You may flee to another opportunity in a different sector and just try to run that strategy again. Now, in this scenario, you have the most volatile asset in the entire market by design, and there's a significant opportunity to exercise those contracts that are really deep in the money and have a very large stack of shares in which you can run strategies, covered call strategies that are significantly much more profitable than running a covered call strategy on other equities like Apple or Tesla or Nvidia, other Mag 7 large tech companies. So if you have an understanding of how the options market works, the design and architecture of the options market, you have a significant potential to earn yield off of your holdings, where a much better potential to earn yield on your holdings than other alternative investments, like even Bitcoin. So Bitcoiners that understand like options infrastructure and options architecture may have interest in MicroStrategy because you're like Nithu here, who understands. He's like, I've got a fat Bitcoin stack, but I also understand how options work, and I want to earn money on my MicroStrategy, my proxy Bitcoin stack, while I just hold my Bitcoin in cold storage, because there's not a great option to run there's not a great architecture and infrastructure to run a covered call strategy on cold storage Bitcoin. So a lot of potential here. Again, this is historic because the size and scale of this and how deep in the money these contracts are. So I don't know if you guys had a chance to listen to Josh Mandell. He spoke with the Bitcoin Matrix today. I think it was at like, I don't know, 1 p.m. Pacific. I'd go back and try.
Excellent.
I would go back and try to listen to that space. I haven't listened to it personally yet. I've only caught a couple glimpses of it. And, Josh and I chat occasionally on the sideline, but Josh has got a significant experience trading these options contracts and seeing the market from a unique lens, where he used to trade bonds at Solomon and have a very good understanding of like how the market moves. And I think that guy himself can move the market.
And he used to make the markets.
Like, he used to make a market maker, right?
He was right before these things were automated using algorithms. He was the guy with the book, making sure the people that sold the broker dealers that sold the options contracts to guys like Jeff are fully hedged out. He was the guy that made sure that happened. They were delta hedged the whole way up, and that now they're sitting fully hedged. So like he totally understands the mechanics of what's going on here because he's done it with a pen and paper, just like anyone who's learned anything.
and now those market makers are incredibly complex. Their computers, their algorithms, they are hedging every position all the time, every day, everywhere. Many, one of the biggest bearish feedbacks of this January option expiration is all those in the money contracts are, fully hedged. And I agree with that. There's a high likelihood that many of these option contracts are fully hedged, but when you're a market maker and you're hedging all of your options positions, you have to hedge all of your options positions across all expirations and all strike prices and across all points in time. So if you have rapid movements in stock price upon expiration that can just completely throw out of whack liquidity and I guess the analysis on how to hedge your position. And I think this is partly the reason why we're seeing a significant amount of volume on MicroStrategy stock. I don't know if you guys have been paying attention, but MicroStrategy stock has been a top 10 publicly traded equity by volume for the last 45 days in a row. That's an insane statistic. Like, how is the 119th largest equity in the market the top 10 largest traded by volume for 45 days in a row? What's going on? Right? There's something interesting there. And I think it's some of these things playing out, right? There's a ton of leverage in the market with these market makers trying to figure out how to hedge across all strike prices, across all positions, and it's changing rapidly when the price of the stock goes any one direction. So I think Josh Mandell's perspective is that there's going to be a significant number of people that are exercising or buying at the money calls. So let's just say the price next Thursday on the 16th is $325 per share. There's going to be a lot of people that are buying at the money calls, let's say 325 or 340. And then a significant number of people that are exercising shares and contracts on Thursday and Friday, including myself, where there's a significant need for shares in the market, and that may drive the price higher, and that may put the at the money strikes in the money, which causes this like little flywheel where the market makers have to hedge instantly everything that's at the money, which shoves the price higher because they have to buy the stock to hedge it that's at the money. And we could see some significant, very fast movement in the price of the stock on Thursday or Friday next week. I'm not promising anything. I wouldn't bet this thing. It could go the complete opposite direction of what we think, right? We're just people talking heads on the internet.
Hey, Jeff.
Go ahead, Grain.
Yeah. So look, I was on the call listening to Josh, and I sometimes talk to Josh on the phone. So with that said, what Josh said, he gave an analogy in the pinball machine. And what the pinball machine analogy was, when you pull the lever back and it shoots the pinball out, then you with the little levers on the bottom, you try and hit the pinball back up, and it tends to keep on dropping down. And what he said was, every once in a while, you hit it just right on the little lever, and the ball overshoots. And basically what he's saying is that he can't predict when the overshoot will happen. And that's why it makes sense to have your positions already purchased and ready. And if you're not going to buy options, that's great. I think that buying just straight MicroStrategy shares, I think that's a good idea for myself. I own MicroStrategy shares. But so what happens is, what Josh said was, it's very hard to predict when that happens and how high and how fast it can go. And so that was the takeaway on the call. He gave a lot of information about wisdom, what was going on, and he talked a lot about that.
Thanks for sharing, Grain. Yeah, please listen to that. Josh is really smart. I mean, he's got such a good view of what's going on in the market. The guy is always working. He's grinding. A lot of people also asked why I've exercised early. I've got plenty of contracts that I'm exercising. I'm exercising basically 2% of my position until Thursday and Friday next week, when I'll exercise, a significantly larger portion of my position on the 16th and 17th. So a lot of people have looked to me and like what to do with these positions. So in exercising my own options, I guess I was really just, indicating to the market that this is an option. You can exercise your options. Many people actually, when they buy their first options contract, they actually don't really know that they can exercise the option. They just think it's like a way to get leverage, and they may not exactly know what the product is. But really, the product was designed to buy the stock at a future point in time at that price. Many people just use them as leverage, and use the options Greeks to trade and go in and out and buy contracts at different points in time. But really, your options contract is the option to purchase the stock at a price at a point in time. So you can always exercise your right on that option. And I think it's important for people to consider that you can exercise your contracts instead of having to sell your option contract and then buy the shares. And there are some tax advantages of exercising as opposed to selling the contract and then buying the shares. So anyway,
Yeah, and make sure you have your plan now. So it's good that you did start now and you actually figured out the mechanics, because some platforms will let you just click a button. Like I'm staring at Robinhood right now, and I can just click exercise this option. But some platforms make you call in and say you want to
Fidelity.
exercise that option. Yeah, exactly.
Fidelity. I can't believe that. Fidelity, you have to call them and tell them you want to exercise your option. And that's just crazy to me.
Yeah. So make sure you know how to do what you want to do. You got to figure out what you want to do and then figure out how to actually make that happen as well.
Yeah, and if you don't have the cash in your account, you kind of have to figure out how to get the cash in your account to exercise. And that's a big thing too.
Which is why they if you're a conspiracy theorist, which is why they amped up the margin requirements. Because they don't want people to have as much liquidity and put extra, pressure on them.
Yep. Yeah. Yeah. The margin requirement, that has been an interesting one. Margin requirement on MicroStrategy has gone up. And there have been a very few times when margin requirements on equities have gone up. GameStop was another instance where margin requirements went from, I don't know, 15 or 25% up to 50, 75 or 100. Like basically you couldn't have any margin if you were purchasing GameStop. So there have been few instances where things like that have happened. And I think it's generally a good indicator of some pressure in the system when there are changes in margin requirements like that. So ultimately, the reason I started exercising early, I'm not exercising like all of my position early. It just really, it's an indicator to people to get your shit together. If you're going to exercise, get your shit together. Figure out who you got to call. If you got to call somebody, figure out how exercising works in your account. Figure out, like, if you've got Vanguard or Fidelity, or like how they do it, because they all do it differently. Some if you just have the cash in your position at expiration, it'll just automatically exercise. They all work differently. So it looks like somebody put in here Vanguard you also have to call, which is just crazy to me.
Yeah.
That's just totally crazy. Like, how can you not just press a button? No, it just seems nuts.
And Merrill's the same way. I think it's more unique not to have to call, actually.
Wow. And I think that's actually a really good point, is most people don't exercise early, right? Most people just hold contracts to expiration. I don't think retail usually holds shit till expiration. Like, they're usually trading in and out, or whoever's using options is taking a large scale position. Maybe it's deep in the money. Like, this is the classic Nancy Pelosi trade, right? Like, all she does is options contracts, but they're super deep in the money, and then they exercise, and they just take those trades at very specific points in time. But they're like, the options that they purchase are so expensive and so large. Like, most normies wouldn't even be able to purchase one option contract like that. So interesting stuff. Anyway, we've got a lot of other catalysts on the horizon. You can go check it out on MSTR Moon. Go ahead.
Yeah, yeah. Bring up the catalyst real quick.
Hey, can I just chime in real fast?
Yeah,
go ahead,
The guy Rob that just made a comment about DTCC, you could DM me about that, okay? I'm very interested in what you just said. So please DM the guy Rob that just said DTCC.
Oh, yeah.
Please DM me. Thank you. Go ahead.
Yeah, and I just want to double down on what you were talking about. Like, I love these, catalysts as a whole, but it doesn't necessarily mean that every single one of them is a tradable event. Like the presidential inauguration, I see people commenting like, if he doesn't free Ross on day one, it's bad for Bitcoin. It's, you know what I mean? And like, Bitcoin's going to take a dump or something, and maybe it will, but so it's not like, okay, let's load up on long calls for every single one of these, dates or whatever. I think if that's your mindset, it's just a recipe for disappointment. Like, I don't care about the catalysts, individually, and if I don't get any of them, like, my thesis on Bitcoin doesn't change, and my thesis on MicroStrategy doesn't change. But you do have to imagine, like, what if we don't get any of these? That should be in your valuation model. And but like I said, my thesis doesn't change. It's just every single one could be a repricing event. So every one of these that maybe is a miss, like even the SPY, like I have 100% certainty that MSTR will be in the SPY, but what if Bitcoin's at 80,000 at the end of Q1? Well, then we got to wait till Q2.
Yeah.
So does that mean everything takes a dump in Q1? Possibly, but over a year, 5 years, 10 years, my overall thesis on MicroStrategy hasn't changed. And that thesis is basically this. If somebody came to me and said, hey, I'm going to start a company, and by some legal loophole, I can counterfeit money, I'd be like, okay, cool. I want to invest in your company, but what are you going to buy with the counterfeited money? And they said, well, I'm just going to buy Bitcoin with it every frickin' day. I'm just going to run the money printer, and I'm going to counterfeit, and I'm going to buy Bitcoin with it. I'm like, yes, I'm all in. When do we start? When can I buy as much of it as possible? Because it's the Cantillon effect, right? You want to stand as close to the money printer as possible. And so that's how I feel about owning MicroStrategy. It's simply, they're disrupting, and they're the clear winner. And that's really the only thing that I really need to know long term about this particular investment thesis. That's where mine begins and ends.
Yeah, that's a great point. That's a fantastic point. I mean, even QQQ. Think about QQQ, right? Like big catalyst, and the price moved the opposite direction. However,
Yeah.
that is a long-term bullish indicator that puts continuous upwards pressure on the stock for the rest of the time that they're in QQQ, which could be forever. right? So these are really good things to be happy about and look forward to, especially if you're holding the stock irresponsibly long term. So it could put
Yeah, and
yeah, go ahead.
yeah, I was gonna say it's important not to pin your hopes on any of these dates, because it's a recipe for disappointment at best and resentment at worst. Because every time you say, "Oh, the price has to run up by QQQ inclusion," and then it doesn't, well, what are you gonna do? You're gonna look for a scapegoat, and that's why people are bitching and moaning about the ATM. Oh, Sailor's at the ATM again. I didn't get my long calls. My long calls expired worthless, and something amazing was supposed to happen with QQQ, and it's just too much, too high of expectations to think that there's a direct correlation between each individual catalyst and some price movement.
Yeah, right. Absolutely. And I think this is a good segue. So a couple of us on this call were at the 100K party at Sailor's house, which was pretty crazy, a pretty crazy event. Felt very strange seeing internet celebrities all over the place, being in Miami is just a strange place as well. But
Keep
anyway,
in mind, these are all internet celebrities to us, right?
these are all internet celebrities to us.
I always have to
correct.
laugh about that because, we live in a very small ecosystem out here where we're all attracted to the same thing. So it's funny how we all know who a lot of these people are and the rest of the world has no idea any of us exist.
That's
It's a fun
true.
place to live.
Hey, Jeff, did
Yeah.
you, I don't know if you thought of the segue the same way I did when Soleil was talking about the QQQ. It reminded me that you asked Sailor, you said, "Hey, congratulations on QQQ inclusion. Were you thinking that was going to happen?" And Sailor goes, we keep our expectations really low on anything. We have a plan and it's not dependent on anything else. And that for me was like, he's manning the ship. Some days are sunny, some nights are stormy, but like he's not looking for any favors. He's not looking for any handouts. And that was just like, unbelievable.
And he's aware that the world's probably out to get him and to try to shove him down. So that, running a conservative business plan such that not expecting any of these things to happen is the baseline assumption. None of this stuff happens is the baseline assumption, which is in my mind, very, very bullish, right? It's not dependent on getting QQQ or depending on getting SPY, which is why we also, show the financial strength all the time, right? They're running a strong conservative business plan in what they're offering to the market currently, and everything moving forward into the horizon are red sweep, QQQ, potential SPY, FASB, fair value accounting. All of these things are potentially bullish catalysts for the future. And you can kind of change and manage that decision-making process along the way, which is why I think we've seen, MicroStrategy raise $18 billion in Q4 to purchase Bitcoin. The market has been very excited about MicroStrategy stock. So we had a couple minute conversation with Sailor. Sailor was on like the best game, right? Like he was running around talking to every single person. He didn't have a speech or anything at the end of the night or anything like that, but he did go around and he was talking to every single individual party. We spoke with him for a couple minutes. We asked him about QQQ. He was very cool. Like he was very cool as a cucumber and interested in the fact that people are shorting his stock with real money without any real research or looking beyond like one page of the information that they're putting out on the internet. Like you could see the like the option or the share authorization up to 10 billion. That was people were shorting based on that information, but not looking on page 2 or not doing any research or analysis on, what that means, or saying that they're super over leveraged, but not actually understanding the debt covenants or looking at how the debt is structured, or any of these other components. So it's really interesting getting that micro glimpse into that perspective. Ben, Tim, you got anything else to add?
Yeah, I thought when we talked to him, the way that he worded things was always very interesting. Like when we did ask about the QQQ, and he said that they were pleasantly surprised, which immediately made us ask the question, like, did you not think you were getting in? And it almost sounded like they didn't, right? Like they thought they were expecting there to be some type of game that kept them out for some reason. And they were just pleasantly surprised with the fact that they got in. So that was pretty cool. He's very plugged in to everything that everybody's saying, which is very interesting. Like,
oh my God.
As a company, they're very focused on hearing what all the different shareholders are saying. So they're monitoring X constantly. Right. We had several people tell us that they're seeing the stuff we put out. They're seeing the stuff in the communities. Like they're seeing what people are saying, but they're also talking to the other side, right? Which is all these big buyers of the convertible bonds, all these hedge funds. So they're hearing things from all these different customers, and apparently they get a lot of very different messages, right? So at the time we were talking to them, obviously they'd been getting pummeled for a little bit on the stock, right? And the retail community was up in arms, and that was what made him laugh, right? And he goes, well, I think that sometimes you just need to recognize that people aren't really willing to understand something beyond what they can digest in a soundbite. And if that's all the time that you take to learn something, you're always going to be surprised by everything that happens all the time. And I thought that was a pretty insightful thing to say, because it's very true, right? If you get a very surface understanding of something, particularly in equity like this, you're not going to understand why it moves and when it moves and what causes the movements, right? Everybody thinks that it's tied to one event, right? We try to rationalize things through one specific event. And at the time it was the ATM, right? And everyone thought that every time that the price went down, it was the ATM no matter what. Even though, we're not going to beat the ATM to death because we've talked about that on several episodes already in terms of how they have to execute that into the market. But we're always shooting to understand something in that simplistic of a view. And the reality is the markets are anything but simplistic, right? And when you have a stock where the derivatives market is as large as the entire market cap of the equity, you've got a lot of things that are at play that are going to whipsaw that stock around. And that's the whole point, right? That's the whole design of this. It's the product that they've created. That's the beauty of the financial engineering that we've seen here, is that you're going to get those wild outside moves that keeps this volatility over 100 while Bitcoin's at 60, right? So when you do start to think about that, there's a lot of levels you have to go to really understand it. Even when you understand what's happening at the different levels, tying them together is almost impossible, right? It's why nobody can really time the market ever, even on these events. We all try to decipher and figure out what this means, but it's hard to get to the full connected picture of how everybody's incentives are going to shift at any certain point in time. And that's the part that people grapple with, particularly on MicroStrategy, right? Because the moves are so extended in both directions that they go, that it's very confusing, right? You're expecting price action to slow down at some point like it does on a traditional equity and stabilize. And this one just V reverses all the time, right? V reverse at the top, V reverse at the bottom. Like it's, you get that gamma flip and it's off to the races the other direction. So it was cool to see that he understood that, and that he'd been spending a lot of time digesting whatever all the people in the community were saying about his equity. And then he's got to parse through, what's going to be noise versus what's real, right? What's real sentiment. And the sentiments from both sides of his buyers were very, very different, right? Nobody on the institutional capital side is making all kinds of noise here while the price is moving. It's what they're hoping for. So it was cool to see that. I also felt a little bad for him at the party because, it was like the guy was getting hunted. We were standing right next to him for probably
like
10 minutes.
Yeah,
just trying to say hi, right? He was right next to us talking to people for 10 minutes, and we're just trying to say hi, but we're trying not to be rude about it. And while we're doing that, 7, 8 people physically like grabbed him and pulled him out of conversations to talk to them. I mean, people, when you're in that spot, it's got to be weird because people lose all manners, right? And they feel like they're entitled to your time. And I almost felt bad for the guy because he couldn't catch a break. He could never finish a conversation with anyone. We got lucky where he's talked to us for a little bit before he got pulled away. But it was very interesting to see how people interacted with him. Like, it was pretty brazen on some people's behalves.
Hey, Ben, can you tell the story about what somebody unfortunately did to Howard?
I won't go into too much detail on it, but there were people at the first. Let's make the point that the party wasn't a MicroStrategy party, right? And MicroStrategy wasn't, creating the guest list, right? That was all being run through some other parties. So, it's not Saylor and MicroStrategy setting the party. It wasn't even a ton of MicroStrategy people that were at the party. I actually saw relatively few MicroStrategy people at the party, but everyone, and I think a lot of people picked up on the internet that there were a lot of, even non-Bitcoin, let alone MicroStrategy people that were at the party. That was a little confusing. And what's interesting is some of these people were they were trying to be big showmen, right? And you probably saw the clips online of all these people, trying to break news from the party. Like, most people are just there having a good time. Most of the people that were there were very normal, very nice people, great to talk to. Some people get a little too confident. And I saw a guy stuff a selfie stick in front of Howard Lutnick, which is a bad move for a guy like that. So, you just don't lose your cool when you're in these situations, right? Be a normal person. Yeah. Like, these are normal guys, and they're willing to give you their time and they're willing to talk to you. But some of the behavior is always a little surprising.
Yeah. Anita, you made a really good point. I think you commented on our picture. It was like one person talking, three people listening. And it was also interesting just watching other conversations. A lot of people spoke at Saylor, which was just a strange place to be when you have the opportunity to speak to somebody so wise and in that position that he's in. We were all ears. We're congratulatory, right? Like, we're congratulating a fantastic year. Oh, I think the other thing I'd leave people on, we congratulated him on 2024. Like, what a fantastic year. And he said, yeah, 24 is pretty good. I think 25 will be better. And just as cool as that, and it was like, oh my God, we're about to put the foot on the gas here. Let's have some fun. This is cool. So
yeah, you told him, hey, 24 was good. And he's like, why are you so bearish? 2025 is going to be lit.
Yeah, pretty much.
We also got to talk to Shkreli quite a bit. And I don't know, I think Shkreli is kind of in the background a lot. And a lot of people probably don't even know who Shkreli is when I mentioned him, but he's the head of their treasury, right? He's the guy actually doing all this work behind the scenes. And what you love to see is, I don't think I've run into somebody that loves what they do more than Shkreli did. Like, he was so energized by everything that they're doing. And he had all these plans, and it was like he was so excited, and he so badly wanted to, tell us about all the cool things they're going to do, but, he can't. But it was just a guy that really loves what he's doing. And he's very energized by all the creativity that goes into the structuring of all these deals that they're doing. And I mean, there's nobody else that you want running the show, even if he's doing it from the shadows. I mean, that guy is as sharp as they come. So I was glad that he gave us a lot of time and was pretty enthusiastic to talk with us about everything he's doing. It was very cool.
Enthusiastic and having fun.
He's loving it.
Somebody's at the peak of their career when they're just absolutely having fun doing what they're doing. And just like totally jazzed. Like, that guy had more energy than like anybody else at the party. But
and good luck beating someone like that, right? Like,
yeah, you're right.
Yeah. Oh my God. And those guys are working their ass off. I mean, I think he said he was working on Christmas Day. He said he was working on New Year's, like right before the party happened. Those guys are working their ass off on all of these future things that they've got going on. So that's who you got working for you is those folks. Fong Li was there. I unfortunately didn't get a chance to talk to him, but a bunch of other incredible people to chat with there. I spoke with both of the Millers, Bill Miller Sr. and Bill the Fourth. Also, yeah, man, it was crazy. Max Kaiser, I had like a 20-minute conversation with Max Kaiser on El Salvador and all those things. Bitcoin.
If anybody's wondering, Max is hilarious.
And exactly like he is on interviews. Like you just take it's like going to a concert and seeing somebody and it sounds exactly like the CD, you know, it's like the exact same. Max Kaiser was just the exact same person you'd expect him to be. So funny. But anyway, shall we shift gears because there's so many other things to talk about? Yeah,
Absolutely.
okay.
Mhm.
So I'm just gonna throw a list out there and somebody just start talking and we'll pick one. Preferred stock, convertible bonds, new bond ETF, short interest, Martin Shkreli, exercising shares, covered calls, MSTY, strategic Bitcoin reserve, bots and bears.
Can we talk Shkreli?
LA fire. Okay, that's the last one. Go ahead, Shkreli. Hit it, Dan. Let's top Shkreli.
Yeah, I don't have a ton to say, and I think some people have listened to more of his sort of thesis around shorting. I think he shorted at 400 by what I could conclude, and he was apparently up 10x on his position at around 350 to 330 a share. So obviously he's shorting with some leverage there. Aside from that, I used to watch his stuff. I respected his takes and his videos and his thinking. So I was a little disappointed and sad to hear that. But as everyone saw his little tweet blowing up at what's
Joe
his
Burnett.
name again?
Joe Burnett.
At Joe Burnett, yeah.
Yeah.
I think the technical word he used was fuckface.
Fuckface.
And that was when his shorts were kind of running the wrong direction. And a lot of us believe that he didn't close them out at around 280 a share when he should have. So I think it's super cool to see that unfold. Hopefully he gets blown up. I think it's a large position. Weren't you saying that, Neethu, that he was saying it was 2 or 5% of his portfolio, or someone mentioned that there was something going on where he was like kept saying the percentage allocation by accident on a live stream.
Oh, I forget who that was, but yeah, somebody did mention it in the thread, I think.
I think it's like 5% of the portfolio, and like that can run quickly, right? If you're on leverage on a short position, which I'm not quite sure how they're leveraged. How's he leveraging it?
I have no idea.
How do you leverage a short?
Yeah.
Huh.
I haven't. I mean, I guess you could just borrow up and like you could just borrow and then lever with more. Yeah.
Oh my God! Can you imagine shorting this on fucking leverage?
I think his response.
Scarier.
His response was, "I wrote up .com bubble shorts 20x."
Yeah.
So I don't know if that's necessarily,
which is not a good brag, by the way.
Yeah, is that brag?
yeah, that's a very bad brag. Like I was underwater 20x on my .com shorts. Like that's not showing.
Nearly.
I don't know. I've listened to
closet.
like I'll troll him once in a while just because it's kind of fun, right? It's just sport because they're out here holding these spaces, and I've jumped into a few of them just to listen to what their view on MicroStrategy actually is, and it's so hilarious how much they don't understand what's going on. Like they're talking like they're these financial geniuses out here. And when you listen to them talk about MicroStrategy, they do all the things that everyone who's not spent a single minute trying to learn the structure here does. They're talking about liquidations and, crazy leverage. And, if someone doesn't rein in Sailor, he's going to lever this thing up so dangerously high. And you don't know what's going on clearly. Because if you looked at the leverage, you would never say that. You would never say that. They're so under leveraged. It's humorous. So these guys are out here doom and glooming like Sailor's just this runaway degen trying to get, to 400x lever the company. And you're going, Jeff just showed the chart, right? Like they're 17% levered to their Bitcoin. Like 17. That's nothing. When I put out the ratios on a post, before we left, I can't remember what it was, but it was like 0.21 was their actual leverage rate. Like it's hilarious. So if people are going to go out and, you know, publicly be that uninformed, I think once in a while it's warranted to poke at them a few times. It's kind of fun. So I don't view, you know, he's putting real money in, I guess. So where do you classify him, Jeff?
He's a black bear, right?
He's a black bear.
He's
right?
a black bear.
He's
So
putting money behind what he's saying. Just what he's saying makes no sense. So you know,
and
more
for
power
that,
to him.
For that, I respect him. Thank you. Thank you for putting your short position.
He's the black bear that got a bucket stuck on his head, and you see him walking through the woods, stumbling into things. Like he's that black bear.
Yeah.
So.
Well, they're often found rifling through trash, right? You know, there's like fart coin or whatever, and you know, he thinks he's found trash here, but you know, we might have a 30-06 to put in his forehead here in 12 months. So we'll see. Yeah. Best of luck to Martin Shkreli, I guess. Yeah. What an interesting position. Oh yeah. And Saylor also mentioned, he laughed at Jason Calacanis.
Good. Someone needs to laugh at Jason.
He was like definitely laughing at that guy.
And I imagine like all the kind of midwits, I like that term, really get upset with the whole like Saylor's sort of talking about capital markets and his understanding of the financial system, and they lash out at him saying he's like a psychopath or he's an idiot. Those are like their favorite terms, or he's a degenerate. And so it seems very kind of, it's the same formula, whether it be Martin Shkreli or Jason Calacanis, like the way they lash out, don't try to internalize it all, and then just kind of dig their heels in on that position. So it's weird. I don't know why Saylor is able to do that to people, but he does.
Yeah, and those people gravitate to each other.
Yeah.
Right. The I guess the midwits of he's over leveraged because it's bewilderment, right? Like it's total bewilderment. You're like, how can this exist? How can this happen? One, you likely don't understand Bitcoin. You likely don't understand collateral. You likely don't understand I guess even convertible debt and different financial infrastructure or architecture. Yeah, it's too good to be true. Something must be wrong. This guy's off his rocker. And then you actually like look at the math and you look under the hood of this thing a little bit. You're like, oh my God, this is like incredibly healthy. Like the balance sheet is incredibly healthy, healthier than almost every other company in the entire market. And they've got a significant moat that like no other company or country, you know, can catch them really, unless the US, you know, does a strategic Bitcoin reserve and buys millions of Bitcoin, which would be good for everybody. Yeah, man. Interesting. It's a totally interesting. Somebody had a good comment and I want to kind of come back to it. Shoot. Wow. There are a lot of comments here. Shkreli wrecked merch.
That would work.
Yeah, that would definitely work. Yeah, the short positions are interesting. There's
Can we talk?
Go ahead, Dan.
Yeah, can we talk preferred stock and how that would change the capital structure? I know Ben made a post on that. I'd love to hear from him because the preferred stock wouldn't count as leverage against their Bitcoin holdings. It won't increase their leverage ratio. Sorry, that was a complete divergence, but
yeah,
maybe next we could talk about that.
Yeah, let's talk about preferred stock. Ben, I'm gonna kick it off to you. I've done a little bit of research on this. I mean, it's flexible, flexitarian. It's flexible stock. Could have a dividend. Could be perpetual. It could turn into equity. It could sit on the liability side of the balance sheet. It could sit on the equity side of the balance sheet. So it could be kind of like a debt. It could be kind of equity. It seems like there's a different capital pool that's interested in this. I need to do a little bit more research, but Ben, if you've got some thoughts or ideas, it would be all yours. And I'll
Yeah.
Dylan's.
I didn't hear Dan's question because I was over here having a coughing fit here for a second. But is it just in general?
Just talking about preferred stock. Yeah.
Is it a liability?
Thoughts?
How does it get recorded on the capital structure?
Yeah, so the structure is going to determine where it lives on the balance sheet. I think there's a reason why they came out with perpetual immediately, because one of the things that you have to do is you have to position the preferred stock to be aligned to equity. So you can't have things like a redemption date on it, like a fixed maturity date for it to be redeemed by the company. If it is, then it's a liability of the company. You can't have clauses in there that say that MicroStrategy can redeem it for cash at a certain date, right? It's all got to kind of be tied to the equity feature of it. So think of it first as, all right, you've got perpetual, right? Meaning you've got no mandatory redemptions that are out there, right? There's no maturity date and there's no obligation for that redemption. And then they make that conversion into common stock kind of optional, right? It's more discretionary. It's at the discretion of the holder of the preferred stock, or it can also be done by the issuer, MicroStrategy, right? So there will be triggers in there where MicroStrategy could force the conversion into common stock, but that doesn't make it into a liability. Liabilities come when you've got some type of cash outlay that you would have to have. So that's going to come more into play. One, when you look at the dividends for this preferred stock. So the wording on this is going to be really important, because if the dividends are deemed as mandatory, that's one thing, right? If they're not mandatory, right? If they're discretionary dividends, right? The intent might be to pay them all the time, but if they're worded as discretionary, then that's not going to create a liability that has to sit on the balance sheet. So the structure of it is going to be very, very important to how this is going to live. And I think that they're almost certainly going to try to structure it in a way where it just sits as equity on the balance sheet and it doesn't become a part of taking away from that leverage space that they have that they could still then use for convertible bonds, right? So ranking in the capital structure, right? That's another one of the considerations. So it's got to fall, behind the debt, but in front of the common stock, which is pretty common for preferred. So that won't be anything too out of the ordinary. But that's initially what you're kind of looking for. You're going to be looking for all the wording and the clauses that are in there that's going to make sure that this preferred stock aligns to the common stock as the outcome in a discretionary conversion. That's what we want to see. So whenever they release the terms, I was kind of hoping they'd release them
this week.
And they might. They don't tend to do anything slow. Once they announce something, they've usually got it pretty well baked. But I do think we're going to see dividend payments. I know that we saw a lot of people out there saying that, well, they could issue these at a 0% dividend. I don't think that's going to be the case, because I think that the type of buyers that they're trying to attract with the preferred stock need that dividend, right? These are going to be true fixed income pools of capital. And so I'm expecting actually to have a pretty healthy dividend on it, quite frankly, which is going to open up a lot of questions for people. Yeah, like I wouldn't be surprised to see something over 5%, right? That wouldn't surprise me at all. And if they do that, the question everyone's going to have is, well, if they don't have that type of cash flow, how are they going to pay for it? And that's where things are going to get interesting, right? Because the easy answer is, well, they'll pay for the dividend with equity, right? Use the ATM to raise the cash to pay the dividend is essentially what they will do. And a lot of people have been looking at, can they issue convertible bonds with negative interest rates and use that negative coupon to pay the preferred stock? And I really don't see that happening, right? I'm not in that camp that's really looking for or expecting a negative coupon on the convertible bonds, because what you have to keep in mind on the convertible bonds is that's just one component of pricing those bonds. So if you decide that what you're going to change is you're going to change the coupon to be negative, that's going to come from somewhere else in the structure of the bonds, right? These bonds are based on credit spreads and risk profiles, and that risk profile has to take into account the coupon payments, the maturity term of the bonds, the risk-free rate of capital, right, which is typically whatever treasury aligns with the maturity timeline of the bond. And so if you decided to go negative coupons, you're probably giving up conversion premium, right? So instead of getting 55% in conversion premium on the money that you're raising, you're probably down to 40. Well, that means that you're now giving up more shares for the bonds, right? So it's all this balance, and people are getting too far into the mindset of, well, MicroStrategy can just dictate terms and everyone's just going to take them. because these are the best performing bonds. And one of the things you have to remember is, one, this is all relationship based, right? This is all private placement with these convertible bonds. And it's a very mutually beneficial arrangement that they have right now, right? These players that they have, all these hedge funds that are getting involved with buying these convertible bonds, they stay at the well, which allows MicroStrategy to issue these things at lightning speeds, right? These guys are closing these bond deals really, really fast because they don't have to go out and search for the capital that's going to be buying them. So it gets out the door very, very quickly. They're getting very favorable terms on these bonds, right? Making sure that they're very accretive to the Bitcoin yield, but they're partners with these people, right? This isn't this isn't a relationship where they're going to dictate those terms. They want these guys to be happy. And so they do have to balance the needs of those convertible bond buyers against their desire to get the most favorable terms that they possibly can, right? Everyone always says you've made a deal when both sides are a little unhappy, right? And that's essentially what they're going to have to keep doing here, because you can't abuse the largest buyers of these. You have to be sensitive to what they need. And we've got a very short-term memory at the moment because the last 6 months have been so powerful for MicroStrategy that we forget that, like, the 2027 bonds, right, that are now eligible for conversion, but only recently, they had about 3 years of just dead sideways action on them, right? And those are 0%. So they were collecting 0% coupons on those 2027 bonds. And for 3 years, the stock did basically nothing. It went sideways. And then over the last 6 months, it went crazy, right? And all the conditions finally flipped in the favor where those bonds are now very profitable bonds. It was a good hold, but for 3 years, it was a painful hold. You locked up significant capital. You were getting zero return on it. And the stock wasn't even moving all that much during that time. So we've got to remember that that is the history of these bonds, right? The history of the bonds isn't just what happened in the last 6 months, which is when they issued most of the bonds. So the most recent ones were very lucrative very, very quickly, but you can't price a bond with the expectation that that's going to be the norm for every bond that you issue. So these guys buying the bonds have to look back and go, well, yeah, that's true over the last 6 months, but you can't guarantee me that equity performance over the next 4 or 5 years, or whatever the term of the bond that I'm buying is. So striking that balance in the terms for how they're pricing these bonds is pretty important. So I know that got way away from preferred stock, but I thought it was kind of important to cover because I've been seeing a lot of ramping up on, well, they'll just force negative coupons and that'll fund everything else, but that's probably not real. So I just want to temper that expectation. They could, you're just giving it up somewhere else.
Yeah, I would summarize it in the convertible bond has 3 pricing mechanics. You've got maturity, you've got conversion premium, and you've got what's the other one? The rate, right? So if you move any one of those pieces, it may move the any of the other pieces. You could think of it as like, stretching a rubber band. Like if you move one, it's going to bring another one up, or if you move one down, it's going to bring another one down. It's kind of like, imagine having a rubber band and you're kind of like moving one and it moves the other one as well. So that's a good way to think of the pricing mechanics. It's possible, but may not occur as quickly as many want it to occur. I think the other thing that's good to point out is of the $7.5 billion of debt that they have on the balance sheet currently, about $4 billion of it has a delta of 1. And so as that debt gets closed, if it gets closed at some point in the near future, that's $4 billion of buy side volume that's going to want to sign up for the most profitable convertible bonds again. They're going to want to, put that capital back into the market and back at work. So I have seen a lot of bearish FUD, which I think is like totally unfounded, that the announcement of the preferred stock is an indication that there's no convertible bond buyers. Like they're out of convertible bond buyers. And that is one of the stupidest things I've ever heard. Like they've tapped into like one tiny minuscule pool of capital here with the current convertible bond market. These are unrated private placement convertible bonds. All right. As you access and tap into different pools of capital, whether that be public pools of capital or even you start rating the underlying convertible, going to the process to get the underlying convertible debt rated, that opens up another huge pool of potential capital. And you've got the $4 billion that's set to convert, which would be ready to sign up for future debt as well. So I think they've barely tapped the convertible bond market and the potential market that's willing to give them capital for this type of infrastructure. These are the most profitable convertible bonds that the market has ever seen. They've even outperformed Bitcoin in most instances. And that pool of capital that wants to sign back up for those is very large. It's going to get bigger. That's why that there was a convertible bond, Bitcoin-backed convertible bond ETF, which I saw coming. I saw coming down the road, and then we saw 3 announcements of convertible bond ETFs where they're any public capital that goes into this convertible bond ETF will effectively be buying the convertible bonds from any one of these entities, Mara, MSTR, Fold, any of these entities that are offering Bitcoin-backed convertible debt. You would be buying a portion of all of the Bitcoin-backed bonds that are coming out to the market. So any capital that's flowing into these instruments, these people that want this like more tampered down volatility product, they will have the ability to access that. That's access those products through a fund that is offering that product. So like that pool of capital is enormous. People are really underestimating how big that pool of capital is. Just because they announced preferred stock doesn't mean the convertibles are dead. Like that pool of capital is going to get way, way, way bigger. I don't think people are prepared for how big that can get.
Well, and what's interesting is the preferred could actually become far more accretive than even the convertible bonds are, right? Like right now,
Absolutely.
convertible bonds are the most accretive because that's what we've seen, right? Where they're getting these 55% premiums. But now you've got to look at engineering how you step down that volatility further, right? The convertible bonds are not as tampered down in volatility as these fixed income, preferred bonds are going to be. And that might mean that you do things like that conversion premium might be 100% or 120% because you don't want that equity characteristic of it to start kicking in and whipping it around as much. So you could see some terms in these that are pretty shocking from a preferred stock because they're intentionally trying to make these far less volatile than everything else is, right? They want it to rely on the fixed income component for a very long time. And the people that are buying these typically aren't looking for their preferred stock to end up converting or being converted over to common stock in 6 months, right? They want a longer duration on this, which means that you might see things like, they might have 5, 6, 7, 8% dividends on them, but MicroStrategy might have a no-call period of 5 years or something to that nature, right? A longer no-call period than they've had on the bonds, making sure that the people holding that preferred stock know that they have the ability to hold it for the fixed income payments for longer. But in trade for that conversion premium could be really significant, right? So those are going to be kind of the things you're looking for because they have to engineer that reduced volatility, which means that call it a call option feature again, right? That equity component of this preferred stock where it starts to be more like the equity when it becomes convertible into that common stock. They need that to be farther into the future, right? They don't want it to happen right away when you're trying to lower the volatility down to 30, right? If that's what they're trying to shoot for, they might want this to be half the volatility of Bitcoin. So the terms are going to be fascinating on this, right? I don't really know what to expect. I've gone out and, done some pricing and stuff on my own to figure out how would I engineer preferred stock that acts as a fixed income instrument for long enough where it kind of takes that volatility out that we've seen even in the bonds. And that's tough to do, right? Because the volatility has been really high and those equity features on those bonds have been kicking in really, really fast. So if you're trying to make these act like fixed equity and you've got a 5-year no-call period on this because you're trying to guarantee these pensions or endowments or insurance companies or whoever's buying these, you're trying to give them that stability of the fixed income payment over time because that's what they want. There's going to be some interesting changes in the structure for how these are going to be issued out to the market. So these could end up being wildly accretive to Bitcoin per share, but you've got a little math to do, right? Because as we mentioned before, you've got to fund these dividends somehow. So it's not as clean of a transaction as 0% converts are, because there's no additional cash requirements there. So right out of the gate, they can very easily say, here's the impact to Bitcoin yield, right? Because they know what essentially the outcome is going to be. They can count on the shares. Now you've got to look at, okay, you know how many shares the preferred stock's going to convert into. The piece you don't know yet is how many shares is it going to take you to fund the dividend, right? That's the part that you don't know yet. So seeing how they do this is going to be pretty interesting, because there's a lot of moving pieces here, and it makes that calculation for the Bitcoin yield a little more complex than it's traditionally been. And it might just be that they're going to ignore that part of it when they first do the announcement, right? Because reality is, in the grand scheme of things, the amount that they're going to be taking out of the ATM to fund the dividend is, I'm going to say, pretty small. I mean, it's, $100 million a year, 150 million, which is a lot of money, right? I'm not saying it's not, but in the grand scheme
billion that was raised
of
in
the
Q4,
volume, but they get to drop those shares over a period of maybe 5 years, right? So if they're issuing those shares when MicroStrategy is, $1,500 a share, they may issue far fewer shares than we would anticipate that they would. They can offset some of it with cash flow from operations, and some of these other bonds will probably roll off. And if they can replace those with 0%, then they've at least freed up, maybe 60 million a year, something of that nature. So those are some of the things to watch as these get rolled out. I'm excited to see what they look like.
Yeah, it's continuing to get more complicated. It's almost introducing like a level of chaos theory, which is kind of what we're seeing in the market, which is leading to this volatility. And, a lot of people were curious why, like at the end of the year 2024, the price of MicroStrategy went down. It's like, well, price of the stock was up 400% in 2024, maybe 500%, maybe even higher. And many money managers need to have realized gains if they want to get paid their bonus. So they may have to realize positions at the end of 2024 in order to get paid their bonus, and then boom, sign back up in 2025 to go long the other way. Alternatively, leverage, right? There was leverage all over the place everywhere. Same scenario. People looking to deleverage, take gains, capitalize on gains, keep them in 2024. That can happen on options positions. If that happens in the derivatives market, that changes the scale and the weight of everybody's hedging equation, which changes how money, like market makers, look at this. And then you've got companies like HRT that are providing liquidity in between. You've got convertible arb desks. Like, everybody's using the stock in a different way, and it just introduces this whole chaos theory of the equity. And it's really hard to, I guess, predict nominally any one day, any one direction.
Yeah. The other thing with the preferred to keep in mind, the reason they're probably doing it in this order, where they haven't issued a convert yet, is I do believe that they'll structure these, right? I mean, they'll be convertible, perpetual, preferred stock. But when they structure them so that they come onto the balance sheet as equity, right, that $2 billion of Bitcoin is going to go and free up more leverage space. So now, instead of being able to issue $3.5 billion in convertible bonds, they might be able to issue 5 or 6 in very, very short order, right? So they might issue $8 to $10 billion in these fixed income products in Q1, which is really, really significant. So I think there's a reason it's going in this order, and we're seeing the preferreds first, is the only point.
Yeah. These are smart dudes. Everything is tactical. Literally everything is tactical. Like, every decision that's made is thought through very deeply throughout the entire process. Man, there's so much here. There's like so much to talk about. Where do we go next? Do we want to talk? Actually, hold on the convertible debt for a moment. Nick Bhatia had an interview. I listened to it the other day, and it was really fascinating thinking about the convertible debt buyers, the people that are buying this convertible debt. Where are the dollars coming from? And his concept, this guy was previously a bond buyer in his past life, and many institutions, the people that are buying these bonds, may not be selling other positions in order to buy the MicroStrategy convertible debt. They may be leveraging they may be borrowing the capital in order to buy the convertible debt because of the collateral of their existing positions and their relationship with banks in other places. So this could be a credit expansion situation where there are companies that are buying this convertible debt using borrowed funds to buy the convertible debt position. So it could be money effectively made from thin air because of other financial positions in other locations buying this convertible debt, which I thought was an interesting equation, and it's made me rack my brain a little bit. I've got his book right here, Layered Money. It's on my list of 2 reads. I got to get through it. It's not very big. So, from gold and dollars to Bitcoin and central bank digital currencies. So Nick Bhatia, interesting conversation, probably worth a listen. Shift gears. Should we talk PE, price to earnings? That's been an interesting conversation. We are now in the FASB days, FASB fair value accounting days. So Q1 2025, MicroStrategy will be adopting FASB fair value accounting. So we think it will not be the Q4 earnings call that we'll have in February. It'll likely be May of 2025, likely right before MicroStrategy World or right after MicroStrategy World, where they announce earnings and FASB fair value accounting. And I think we could see a significant earnings per share announcement at Q1 2025, which I think will be pretty monumental for the market. Again, back to Soleil's comments at the very beginning. Who knows if this results in a massive repricing event? I mean, it could happen. It may not happen. There are many algorithms that trade off of PE ratio. With MicroStrategy having a positive earnings outcome in Q1 of 2025, that would result in them being qualified for the S&P 500, which has been, part of my long-term thesis moving out into the future. And if you qualify for the S&P 500, there's a significant amount of capital that would be buying MicroStrategy stock at any price. These are agnostic buyers. So I think that's a good long-term horizon. Now, one thing I think is interesting, and guys, feel free to chime in here at any point. On the MSTR tracker, so what you're seeing on your screen here is this is the net asset value premium over time. But then you also can look at the PE ratio over time too. So you can look at price to earnings, and this is taking trailing 12 months earnings estimate based on FASB fair value accounting. So you can look at what the estimated PE ratio is based on the trading value of the stock at any one day. And I think this is incredibly appealing because there are no other companies in the market that have a really good idea on what their earnings is day to day. So in my mind, this may stabilize earnings volatility in the entire market, especially if other companies adopt a Bitcoin treasury strategy and start announcing Bitcoin purchases at a weekly interval, similar to what Saylor is doing, where you would be able to have an understanding of how valuable the company is on any given day based on the underlying value of the Bitcoin holdings on their treasury, where you'd have some better perspective of it. So it may result in some kind of stabilized earnings volatility into the future, which I think is an interesting thought experiment. What some people are really excited about is that, MicroStrategy's current PE ratio is around 7 and change based on the value of Bitcoin today. And the PE ratio of the rest of the market is on average is like a 30. But if you go back to my original analysis, and this is not up to date, but multiple assessment, PE ratios also range wildly. PE ratio 39, 55, 9, 178, 85, 46, 13, 34. I mean, there are some averages, there are some consistencies, but at the end of the day, all companies have different financial structures and different ways of operating their business and how they manage their own treasuries, their cash flows, their liabilities, et cetera. So, I mean, what are your guys' thoughts on PE ratio. Like that, this has been a narrative. I mean, historically, the narrative has been mNAV, multiple on net asset value, just like managing a balance sheet. But if we think about a future where the Bitcoin is announced as earnings and retained earnings held on balance sheet and the financial strength, I mean, what are your thoughts?
I think it's going to take a long time to convince people that the investment income as a result of Bitcoin price appreciation should be considered earnings, even though it's accounted for using the new fair value. So that's kind of my logic for why I don't think it's going to be an absolute crazy shocker repricing event necessarily on the date it's announced. But I do think the metric of BTC yield has a very good argument in the near term as a traditional earnings, and to slap a traditional multiple on that earnings, because BTC yield is new cash flows or new Bitcoin flows into the company effectively that are being held as retained earnings largely. And so in that case, it's probably more valuable than traditional cash flows.
So, go ahead.
Yeah,
Go ahead.
no. So just my point is, I think BTC yield in the short term is a very arguable earnings proxy, and then from that you can build the P to E ratio framework, in my opinion.
So I've got a few questions just to kind of like push it a little bit. One, convincing everyone. I think you're right. It's going to take a long time to convince everyone to think of this as PE as like or that MicroStrategy should be valued on PE. I think this conversation of how to value MicroStrategy will be it'll be an exciting topic for the next decade, right? Like people are going to argue until they're blue in the face.
Yeah,
until
they already are.
Until 2032, dude. Like this is like, it's going to be the topic for the next decade. Like everybody's going to argue and say it's overvalued. Everybody's going to argue and say it's undervalued. That's just the way it is. Like nobody's going to have a great perspective on it. I guess, Dan, to your point and looking at BTC yield, if the entire market took BTC yield as the way to value a company, wouldn't that indicate that the entire rest of the market that isn't operating on a BTC standard should be repriced?
I think that's a good point, and I think it's a fair argument to make.
Right? Like, wouldn't that indicate that Apple's worth zero because their BTC yield is zero?
I mean, that's an extreme.
I know it's super extreme, but it's just to show like, okay, that's a perspective, but like you're comparing apples and oranges. You're comparing different monetary infrastructures.
Yeah, completely.
So how do you measure?
Well, I think the real tough question is like when a company generates earnings, there's no like, oh, sorry.
The market is retarded.
That's the answer. We solved it.
Yeah.
I do think when a company generates earnings, those earnings, obviously the cash flow generated into the business will continue in theory growing at the rate of growth of the company if all earnings are reinvested into the business. Whereas in the case of BTC yield, that BTC is compounding indefinitely at whatever your models predict. And so in our case, maybe that's a 29% Saylor model over 21 years. So the future value of the cash flow is actually higher, considering that is all going straight to retained earnings, to your point. So maybe this BTC yield is much, 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 much more valuable to the company than earnings. And therefore, even if you think BTC yield is the earnings, then there should be an even higher ratio for those earnings than traditional dollar income, if that makes any sense.
Yeah, I'm following.
But I don't know how you value that. I don't know how you value that.
It's tough. It's super tough. And it's funny. I think somebody said, oh yeah, market already knows the event. And I totally agree with that. All of this is public information, like FASB fair value accounting, totally public information. Like everybody can go out and calculate this if you care about it. My question is, if 75% of the entire market's daily trading is on algorithms, are 100% of those 75% of those algorithms, do they have factored in the FASB fair value accounting change for a flip in PE ratio? I don't know. Maybe they do. Maybe they're that smart. But my understanding of how the financial how stupid some of the people running these financial companies are, I would take there's a probability greater than zero that there are some algos that maybe don't consider or aren't considering this potential event.
Ben,
Additionally,
do you have a Bloomberg?
What's that?
Ben, do you have a Bloomberg? Do any of you guys have a Bloomberg?
No. Dylan
I'd be
just
curious
got
to see. I'd be curious to see what it says about the FASB, because I imagine there's a clause that says fair value accounting will change Q1 2025, and I would assume the algorithms take that into account.
Here's what I think the conversation misses is it's not just EPS being positive and getting repriced day one. It's qualifying for the S&P 500. And I think qualifying for the S&P 500 gets front run all the time.
I think that's a super valid point.
All the time.
And I think to that point, though, that this may not happen in a blip of an instant, sort of when the Q1 earnings is announced. I think it's going to be a slow realization, or fast, but a gradual realization and repricing into sort of an anticipation of S&P 500. So yeah.
One interesting thought experiment, because I like bringing this up. I like looking at Tesla because it's fascinating. But again, Tesla, there's a ton of shit going on. But if you go look at the Tesla earnings reports over time, and you map it on Tesla price, you can see they had one positive quarter of earnings, and it's like, okay, they're off to a good start here. Then they had their second positive quarter of earnings in a row, and all of a sudden it's almost like the price just started going up. It's like, oh, you just had 2 quarters in a row. You're 2 quarters away from having positive earnings and qualifying for the S&P 500. And then after Q3, stock rocketed. The stock totally rocketed. They hadn't had their 4th quarter of positive earnings in a row, but it was basically like, oh, you guys, the guidance that has been given, you've got 3 positive earnings reports in a row. And then they got the 4th one, and the stock continued to go. So it's just an interesting data point. Again, it's zooming out. It may not, like, there's so much other shit going on because it was 2020 and COVID and, capital markets, 0 interest rates, ZERP, so many other things, but it's an interesting data point to zoom out and think about. One other thing is on the MSTR tracker, you could go into Sailor charts, and I'm just going to share my screen again. And I think this is really cool. I asked Radu and I have been Lizard Wizard and I have been building on this. This guy, Lizard Wizard, has done 100% of the work, but I have talked about putting this together. But I think this is interesting, following along, looking at estimated earnings per share and PE ratio, adopting FASB going back historically. So you can see and estimate what the earnings, the EPS for Q1 may look like. And so as of today, I think EPS for Q1 is about $2.08 per share, given the price of Bitcoin has fallen down to 94,700. But this thing is totally dynamic, and you can hover over any one of these bars and you can look at the analysis that goes into it. So it shows all of the acquisitions and the gain, and the relative price performance for each one of the acquisitions and gain. So it's a fun thing to play with. Additionally, a ton of other people have been posting this online, which I think this is hilarious. You can, there's a scroller bar here that you can play with. Let's just say the Bitcoin price goes to 1 million and the PE ratio is, somewhere around 30x, which is market average. This is an implied stock price of $44,418. Again, this is crazy, right? Because Bitcoin's incredibly volatile and the market probably won't price that in, but it is an interesting mechanic to play with. And even if it stayed at a PE ratio of 7 where it is today, and Bitcoin price at $1 million, that has an applied stock price of $10,300 per share. So again, thinking long-term about this stock, if all else stayed the same, Sailor continued to buy more Bitcoin, the price of Bitcoin goes to $1 million, PE ratio stayed constant, you'd be looking at a significant increase in MSTR price over time. Soleil, what are your thoughts, man? As a covered call seller, how do you think about this? What's your life looking like these days? What's going on with you?
Yeah, I'm trying to be more strategic. So I'm watching the implied volatility charts. And trying to be a little bit more of a sniper, selling covered calls or closing long call positions when implied vol is high. I I trade mostly on Tasty Trade, and they have a metric called IV rank. So when that one's over 50, is generally can be a decent indicator when to add covered call positions. In November, it was pegged over 100, and 100 is supposed to be the highest it can go. But if the day that you're looking at it, if it's the highest of the year, that it'll actually peg beyond 100. But since I quit my job, if I need money, I just have to sell a covered call. There's no other way to get money other than just selling the shares outright. So I've been selling covered calls in every environment over the last year and a half. And sometimes the stock goes over your strike, and you either have to pay to roll or get calls covered, shares called away, or you potentially you could roll for a credit. But there was something that I kind of realized was an advantage to selling covered calls that I hadn't thought about before. So MicroStrategy is very sensitive to Vega, meaning when implied vol skyrockets, the option prices are more sensitive. And I think most of us noticed in November where we're like, holy shit, why are the 50% out of the money calls so expensive? It was like,
It's
it was
crazy.
insane.
Yeah.
And so one of the things that I kind of, I guess, you can say learned my lesson in March, when I had some shares called away, was throughout that next chop over the next 6 months, I started stacking long calls instead of purchasing shares with the premium. And the weird thing about a covered call, when it does go in the money and you're having some shares being risk called away, at expiration, those are immune to Vega. The price of the covered call, when you want to, close it out and maybe you have to pay to roll, Vega is completely irrelevant now, because once it's in the money and it's at expiration, the price has to be the distance between the strike and the current price. So the Black-Scholes model goes out the window. All of the Greeks are out of the window, because once it's in the money and it's at expiration, delta is 1. So you can never get wrecked more than, the price above the strike. However, if you have long leveraged calls, those can be just super inflated because of the sensitivity to Vega. So I don't know if I said that the way that I wanted to, but the point is the shares, when I was buying shares with premium, it wasn't able to keep up, right? The major moves in MicroStrategy, especially in March, I had like 100 shares get called away, and just owning shares didn't keep up. But the long calls, if it retains that sensitivity to Vega that it has in the past, those should allow even the covered call strategy. I should be able to pay for those, pay for those events with the long call exposure that I have. So that's kind of a little bit of a tweak to the strategy that I've done lately.
Somebody said whiteboard for this one, and I feel like you need. I feel like you need to lead a class, like a good old fashioned college course, and like get on the whiteboard and start drawing some of this stuff out. Because I mean, what you've learned, and we talked about this on Monday when we had our internal call. It's like, a lot of people have asked, oh, what books can I read to learn about trading options? And the answer is, you kind of just have to do it. You kind of have to like learn some of the math and do it, because there's so much emotion that's involved when it's real money that it changes your entire perspective of the math. Like, math is different when there's emotion involved.
Mm-hmm.
And there's you literally cannot comprehend the math of options trading when you don't have money like in it. I'm not telling everybody to go out and like sell covered calls and learn options and go degen a bunch of shit. It's just a lot harder to learn without actually doing it. And you have to kind of like make some mistakes and learn on the fly. Like Soleil, you've made 320 videos. You've done this like every single day for the last like year, and you've learned a bunch of shit along the way. You're talking about like, okay, now I'm hedging a long position with leaps instead of buying shares. And so there's 10,000 ways to skin the cat. You just kind of have to figure out what works for you and like how you can manage your portfolio into the future. That being said, some people definitely are not going to want to learn how to do that.
Yeah.
99% of people, 99.9% of people are not going to want to learn how to do that. So,
and there was a bunch of comments about what do we think about MSTY as well. And I did a video on them, and I like them. I mean, I think I've said it before that I think every bullish strategy, no matter what bullish strategy you pull out of a hat, MSTR is going to give you the better performance than any other stock. So MSTY, it is bullish. And I kind of reviewed it before this call. And I don't prefer them even versus holding spot Bitcoin, just because I don't like paying management fees, number one. And number two, for me personally, yeah, I'm going to sell my own covered calls and not pay someone else a management fee. But I looked at their dividends that they paid out, and they were pretty legit. Like it was
huge, massive, like 120% annualized. Holy shit.
Yeah,
I think December
exactly.
was a 13% per month. I mean, it was a huge month, and they're selling covered calls. And MSTY, for those that don't know, it's an automated covered call ETF. And so basically what they do is run a covered call strategy. They have a synthetic long position. They don't actually hold MicroStrategy shares. They have a synthetic long position and a bunch of other laddered call options out into different expirations, very close to the money. And they're like credit spreads. So they're locking in the position if it goes in any one direction. So they kind of try to lock it in. So the yield is incredibly high, but just something to be aware of. One, there's an expense ratio. It's 99 basis points. Two, any dividends that you get paid from MSTY are taxed as ordinary income. So depending on your tax bracket, you definitely have to take that into consideration. Alternatively, for me, I have a small chunk, 5% of my HSA, which is a health savings account in MSTY, which has been quite lovely so far because it is just financing my massage therapy and chiropractic and physical therapy whenever I need it, because it's just spitting out income. That being said, if you're looking to hold this like MSTY, if MicroStrategy runs away, does a 2x in 5 days, you're going to miss the upside on that. So that's just something to keep in consideration. Like if you are getting paid dividends, it may be beneficial to reinvest the dividends only if it's tax advantage. So you got to take into consideration so many different things with MSTY. It's like taxes, options trading, the rest of your stack. I wouldn't hold just MSTY, but there's like many things that keep it into consideration.
Yeah, I pulled up the charts side by side, and MSTY got down to like $20 a share in September, right at the same time that MicroStrategy was around 125. And MicroStrategy did a 3x. Actually, you could say it did a 4x if we went to the top. And MSTI only went to 44. So it, instead of holding spot and getting a 3x, 3 or 4x, you took 10% a month dividends and you only got a 2x in the MSTY price. So I think it'll underperform spot, but anybody who wants to generate income and doesn't want to watch 300 of my videos to figure that shit out, go for it.
Yeah.
So Jeff, I hear what Grain has learned from his on options.
Oh yeah, Grain, hit us.
Don't copy trade me. Hey, folks. I'm just going to say a couple things, and I'm going to bounce off. This is very informative. I was able to go back and forth with the other guy that I was just talking about before. So I think that Josh is right. It's like a pinball machine, and we're going to see the exact same thing happen. The information that I saw was by doing both polls, 25% of the people are under 60 days, and 50% of the people are under 1 year. And so what's going to happen is the price is going to run back up again. It's going to bring in a whole group of new people on the next run up, whenever that happens. Do I think it happens next week along with Josh and January 17th? Probably. I guess so. And it's going to run up. I'm prepared for it. I have my option positions. I'm ready for it to go. So what did I learn? I have a ladder that goes out all the way to June of 2026. So I'm ready for whenever that overshoot happens. But we're going to see the exact same thing happen. The price of MicroStrategy will rip up. It'll go really high. Everybody will get excited. I'll double my follower count. We'll all go up by 50% or double our follower accounts. And then 4 weeks after the next peak, you're going to hear people like, oh, I just bought this thing and it's down 30% and I hate life and I lost all my money. It's going to be the same thing again. We've all seen this now happen multiple times. So to answer your question, Tim, what did I learn? As the new people come in and get excited about it because they haven't done the homework or they got in late or they got in the past 60 days, they don't have the base of information. They don't do appropriate risk management and position sizing. And then what happens is that they lose a fair sum of money and they think that MicroStrategy is terrible. And they're probably not, they may not well know a lot about Bitcoin. So maybe I'll ask that question also. But I tend to think the people that understand Bitcoin buy into MicroStrategy. So that's what I think. I'll just wrap up with a couple other housekeeping items. I'm going to throw a party at MicroStrategy World.
Hell yeah, Grain.
Right now I think about, yeah, I'm going to throw a party. Right now, 75 people are registered and they're going to show up. I think if the price of MicroStrategy rips up really high, $500, $600, $700 a share, it'll be 150 or 200 people. And then I have to figure out what size of a place to rent out at the hotel. So I'm working on that with the Bitcoin gal, and I'll take care of that. So if people want to meet me, I'll be there. I'll be in New York on February 24th at the Levon Hotel for Crypto Week. Tim, you going to be there?
Yeah, I'll mute. February. Yeah.
We're all going to be there, right?
Oh, sorry. I'll be out there in February. I just dropped out for a second. We'll be out there in February. People want to meet us, then come join and meet us in
What are we
person.
talking about?
And so I'll be
Crypto
in New
world?
York.
Yeah, it's what's the name of it, Tim? The February event? Oh, we lost him. Is everybody?
I think it's like Crypto Investor Week.
Bitcoin Investor Week.
Hold on.
Okay.
Yeah, Bitcoin
Yeah,
Investor
go to
Week.
bitcoininvestorweek.com.
Yeah, Bitcoin Investor Week. That's it. Yeah, in February in NYC. Yeah, that'll be good. MSTR World in May. You've got a lot of things on the horizon for sure. Shall we talk? Maybe do a couple minutes Q&A. Then maybe we could talk about this LA fire, which is just utterly crazy. Oh my God, totally horrendous, harrowing event in California. Will definitely impact the insurance world. But maybe we get into some should we do some Q&A?
We should.
Yeah.
One comment I was going to make, just
Let's do some Q&A.
just when we were talking about earnings, that I think is kind of funny is it's almost hilarious how everybody's determined what they're willing to accept as earnings and what they're not, right? Like if a company has to incur a ton of expenses in order to generate some netting effect against the revenue that they bring in, those count as earnings. But if you find a very low friction way to create value that happens to happen off your balance sheet instead of through your traditional income statement, everyone writes it off and they don't look at that like it's real, right? So it's funny to me that people have gotten so tied to the source of where it's coming from. And they're all just like, this one's different because they abandon the income statement approach, right? Which is a shift, a fundamental shift for corporations, right? Everything is lived and died by the income statement, right? Everything's top line this, bottom line growth, EPS growth. And they just flipped the script and said, we're going to use the assets we've already got. We're going to leverage our balance sheet in order to generate new value, right? Which also goes to our shareholders. And the market goes, yeah, we like earnings, but no, not those earnings, right? We don't care about those. It just makes me laugh because they're going to figure it out eventually, right? The people that are going around talking about how Bitcoin per share doesn't matter at all. We had that fight for weeks, right? Leading up into the end of the year. I mean, luckily we were on a break, so we could just kind of let all that die down for a while, where people were doing the, mNAV is the only thing that matters. And, that's,
well, here's another one in the chat. Earnings are irrelevant. Only free cash flows matter. LOL. Right?
yeah,
Like,
yeah.
Dude, no, what?
Yeah, but
my
but
God,
people
this is crazy.
miss the point of what's happening here, right? I mean, when you understand that equities are going to move in cycles, no matter what, right? Every equity can basically have one tie as a sentiment indicator to the broader economy, right? You'll see stocks move in unison regularly throughout the year in these regular cycles. But now that you've got MicroStrategy and they're engineering new and more frequent cycles, that mNAV's a calculation that's going to continue to expand and contract throughout time. That's what's going to happen. The difference is the Bitcoin per share is building a steadily increasing intrinsic value floor that's higher every time that it goes through these expansion and contraction cycles. And what that means is when the sentiment shifts, so like right now, I think the intrinsic, I've got a table that I've been trying to put out a post on this for a while, but I keep getting sick and I can't pull it together long enough to do it. But like when you look at that intrinsic value per share, which is, I don't know, something like $150 a share or something like that right now. If all you did, right, when people were yelling about the ATM, if they just stopped, right, say they got to, the end of 2022 where they had 0.0008 Bitcoin per share and they just stopped there. What the people that are telling me that mNAV is the only thing that matters, what they've never been able to articulate is what's your strategy that results in the mNAV only going up? What would you be doing if they were now sitting static and just waiting for the next time they could issue a convertible bond? What strategy, and it's a serious question when I ask it, what strategy do you have that should warrant a constantly climbing multiple to net asset value if you're not doing anything actively to generate improvements in the financial position of the company? And no one ever gave me an answer, right? I went to great lengths and people were, begging me to stop engaging with these people. But I was curious, right? Because they were saying, they thought about it, and that they came to this conclusion that this is all that matters. And they're missing the fact that floor value. So like in my chart right now, what I'm looking at is we're at about a 2.25 multiple to net asset value right now on MicroStrategy, right? If they'd stopped at the end of 2021, the share price at 2.25 today would be $120.56, $122.76 in 2022, and $162 if they'd stopped at the end of 2023, right? But what it shows is that constantly increasing intrinsic value behind the shares gives you a higher starting point. So if you go up 3 times from 100 versus 3 times from 200 or 300, you can do the math that on that expansion cycle, your share price goes significantly higher than it would have had you not continued building that intrinsic floor behind the shares. And likewise, when it keeps contracting, it's going to keep contracting to a higher point than it contracted to last time. So Bitcoin per share matters a lot. People don't get that yet, but it does matter a lot. Because in these cycles, and particularly with the derivatives running the show now, right? The derivatives are what's going to move the equity price. When we start doing these expansions and contractions, you want that intrinsic floor value to continue to climb because it's going to magnify those expansion cycles and you're going to keep hitting these higher and higher share prices as it happens. So don't let people tell you Bitcoin per share doesn't matter. And when I get around to it, I'll put this out because when you see it in a table, you can very clearly see the beneficial impact of building that floor consistently over time, even if you're using an ATM to do so, right? It definitely matters. You just feel bad about it during times when you're in the contraction cycle. And it's going to happen every contraction cycle that we have. We'll probably have 4 or 5 of them this year. So buckle up, but it does matter.
The amplitude is increasing, right? Like the swinging is going to increase, and like having a higher Bitcoin per share makes the amplitude fly further higher and further lower as well. It's starting to trade like a $1 trillion company. It's just not a $1 trillion company yet. Like that's like this amplitude. And just to put that in perspective, right? Like Nvidia today, right? Over the last 2 days, Nvidia has dropped 4 MicroStrategies in market cap in 2 days. Just to try to put it in scale. You go look at Nvidia price and you're like, oh, well, it's only down this far. Well, it's like, no, they're down $400 billion in market cap. Is 4 MicroStrategies, you know? And a lot of people just like can't really conceptualize that kind of like that framework, but like it's starting to trade like $1 trillion asset. It's just not there yet.
Yeah. And when you forecast it out and you start looking at, if you just looked at it and said, it's only ever going to get to 4x mNAV, right? And I hate that I keep saying mNAV because I personally don't really care what mNAV is, but because everyone's, you can't ignore it, right? Because whether we like it or not, our fates got tied when the ETFs came out and everyone started comparing the two investments. And some people can't figure out that this is not
GBTC.
just a holding company of Bitcoin, right? But when you start to look at it and you do the projections out, assuming certain growth rates in that floor value, that Bitcoin per share value, that intrinsic value buying the shares, you start to see the impact over time very, very clearly. And it really makes the case for why it matters. So anyways, I just want to do that rant, but I do think it's hilarious. One, what people think counts as earnings and what they're willing to ignore, right? Like they're pretending that this value creation just isn't happening, even though they created what, $48 a share in the last quarter, right? New value for the shares. Like you can't ignore that, but they're going to try. But it's going to be futile, so it's going to be fun.
And I tweeted about this today. I mean, we might start seeing new metrics, like instead of trailing 12 months PE ratio, what if it's trailing 4-year PE ratio? And it's like that. Okay, that might be interesting. You know, especially if you're thinking about something on a Bitcoin standard. Like I need a whole cycle's worth of PE to like put this into perspective. And now that might make you rethink of like how anything else is priced. I mean, all of these metrics are just one metric, right? Like all of these other companies, hedge funds, investment companies, they're all running their own metrics and they don't give a fuck about PE ratio. They don't give a shit about mNAV. They're all running their own analysis and they're running their own algos on their own things that care about different stuff. So like PE ratio, mNAV are just numbers. Like it's just a number. And in my mind, again, the only thing that you can really compare is like market cap. Like that's the only thing where you can really put something next to something else and say like, oh, like MicroStrategy is worth less than waste management today. And I guess that's where we're at, right? Like that's the value of MicroStrategy is worth less than waste management. In my opinion, I think that's not high enough. So I'm going to hold until it's higher than waste management and higher than Nike and all of these other companies that are above it. So
it's what's interesting about MicroStrategy though, is that it's forced people to learn so many new things that they've never cared about before, right? Like until MicroStrategy came along, who was out here, you know, figuring out the net asset value of the companies they were invested in? Probably nobody. Right? Nobody. So if nothing else, you know, it gives everyone this entirely new education in financial literacy here when it comes to corporate finance. So I guess we got to at least thank it for that. Yeah. And having this argument with people forces everyone to dive in and get an understanding. So it's not wasted, I guess, but sometimes it's annoying. I'll admit that.
Yeah. All right. So we jump into some Q&A. We've got what were the 4 of you talking about in this exact moment? This is the picture that was being referenced. Dan, you got to hop off. Great to see you, man. Take it easy. Any final thoughts you want to add?
Take it easy, guys. No final thouts. Thanks. It was
awesome,
a good stream.
Yeah, Dan.
Later. I don't know. Sailor was probably talking about Jason shorting this and not having any idea what he was talking about. So something along the lines there. We are all listening intently about Sailor talking shit, which was great. I think he cussed 3 times in like the 3 minutes that we talked, and I've literally never heard him cuss before on on like any podcast he's ever been on. So that was he's like, oh, he's human.
I
He's
hope he was
human.
cussing in this exact shot.
Like, yeah, he
At
was.
that moment.
He like shoved it out there. You know, it's like these fucking these fucking guys. That was pretty funny. How tall is Sailor? 5'10", probably. I think we're all just tall. Like I'm 6'2". Ben says he's 6'2", but I think he's 6'4". Tim, what? You're 6'1", 6 foot. Yeah. Okay, let's go to the next one. Love to hear what you talked about. At the 100K party, we already hit on that. Jan 17th options timing and pricing. We talked about that a little bit. Feels like the next 2 weeks are setting up for some fun. Yes, it could be incredibly volatile. I mean, there's no precedent for the next 2 weeks, so I'm not really sure exactly what to expect. But I'll tell you that I'm exercising a bunch of options over the next 2 weeks, primarily on the 16th and 17th. I've got to talk with Josh because I've got some dry powder that I would like to deploy that might go into this. So more to come there. The next 2 weeks should be really fun. We should be deep diving. Go ahead.
Is it conspiracy theory if you put like an insane limit sell order on your shares that they can't loan your shares out? Like if you have a margin account, I think they can loan your shares, right? But if you put like, oh, I want to sell my MicroStrategy shares for $50,000 a share or something, I don't know. Is that a dumb thing? I've heard somebody suggest that you can do that, but
I think that's
that makes a difference.
I think that's the alternative to like this like direct registering shares, or like, so they don't get loaned out. I mean, Grain has talked about his shares getting loaned out. I guess he's not seeing it because it sounds like these market makers are borrowing MSTU or MSTX instead. So they're using other products. So yeah, I think he was mentioning that he had like some other levered products that were getting borrowed out significantly more than the unlevered products. So it's again another instance of like all of these products are getting created around the fringes to facilitate just like these other financial instruments. It's kind of crazy.
Well, and the shares have got to be really easy to borrow on MicroStrategy, right? I mean, it's not like people are holding these and not trading them around. This thing's getting traded constantly. So there's no shortage of shares that are available in the market on this one at any given time, right? The liquidity is crazy high.
Pretty high.
And I think that's an important part for a lot of these big institutional players is having that ability to borrow shares pretty easily. So I think that's probably why they're not seeing them. His aren't getting, hypothecated very regularly at all, right? Because there just is no shortage of them right now.
The part I don't really get is like, yeah, it's really liquid, but I mean, let's be real here. So how many? Oh, actually, hold on. We can do the math. We can find out. So this is the MSTR tracker. You can go click to expand. Daily traded volume. MicroStrategy traded 18 million shares today. 18 million shares. So 18 million shares. There's 265 million shares outstanding. Like, did 10% of the shares outstanding actually 7% of the shares outstanding actually trade hands today? I don't think so. Right? Like there's no way. Like there's got to be something going on there, right? There's back and forth. There's like high frequency trading going on back and forth in between there. Like it's hard for me to comprehend and just like agree that 7% of the shares outstanding are trading on any one given day. Trading hands, like truly trading hands to somebody else without going kind of like back and forth.
Yeah, but you got to also remember the size of the derivatives market, right? And so we've been getting some pretty wild swings. So you've got all this hedging going on, coming off, going on, coming off, right? I mean, it's had some pretty wild intraday swings as well, while some of these big strikes have been going in and out of the money pretty regularly. So you're going to get a lot of volume just from that alone. But
but all right. So my question on that is options, like trading options doesn't impact the stock volume.
Sure it does.
No. Like I guess that statistic, like the open interest changes in I guess it would change the anybody that's managing their hedge that has underlying would be managing their hedge with the shares
Yeah,
outstanding.
the market makers are adjusting hedges all the time, right?
Yeah, so that would be
Every time
their
these contracts are out
hedges.
there.
Their hedges are adjusting relative to the developments in the options market. So if the options market is insane or absurd, which it makes sense when you have big green days or big red days, MicroStrategy is like top 3 publicly traded company. Like today was a relatively benign day. And so they're the 6th largest traded equity as opposed to like top 2, top 3. And that makes sense. Wow. What a fascinating equity. It's really crazy. Okay.
Well, watch for that volume to get really high, right? Because I know that this Friday's expiration is actually a pretty big one too, right? I think Jeff Park said that this Friday would actually potentially be the most painful for some of these market makers if something really crazy happened, right? And the stock spiked up to 700 and something. But so with that happening, right, you might get all kinds of these hedges moving in and out, which are going to just pump volume onto the shares themselves. So you might see that particularly Thursday, Friday, I guess, right? There's no trading today.
No trading tomorrow. Yeah. Well, it'd be nice to have a break, honestly.
Yeah.
But yeah. Okay. Let's go to the next one. We should be deep diving FASB at this point. Where exactly is the starting point for BTC price, et cetera? EPS calculations done correct. Starting point for BTC price, I think it's around 93,000. I think it ended December 31st, 93,000. So I think MicroStrategy needs the price of Bitcoin to be about 95,000 in order to wipe out the last 4 quarters of negative earnings. We don't know exactly what the Q4 earnings release will be at this point, but I think, assuming the price of Bitcoin is above $100,000 at the end of Q1, it would easily wipe out historical negative earnings and qualify them for S&P 500. But yeah, I agree. A lot of people should be talking about FASB. I think this is going to be an interesting conversation. Again, I don't think this is a huge repricing event. However, this is the gun going off at the starting block. Like if you think MicroStrategy is being talked about a lot right now, just wait until it's the talk of the town after posting, I don't know, a $20 billion gain in a quarter, or a 10, 15, $20 billion gain in a quarter, and outperforming every other equity with the positive earnings in the accounting. I mean, this is going to be a newsworthy event that's going to be at the top of conversations for the next year. So I really think this is the gun going off the starting block of people understanding like how this actually flows through to balance sheets and financial planning for managing a corporation. So it's an interesting topic. What can we do as a group? This is funny. What can we do as a group? I mean, that's none of this is financial advice, and I don't feel like we can coordinate anything because I do not want to go in front of a judge and say that I like the stock, but I do like the stock. To coordinate max pain for the market makers, I'm exercising my shares. That's all I've got. I mean, Josh Mandell has talked about this. He's indicated that, exercising your shares just period. And I think what he's doing is buying at the money call options on next Thursday or Friday. So I would listen to that Josh Mandell conversation with Cedric. That's probably worth a 30 minutes. And so you listened to that one, didn't you?
Yeah. It was awesome. I mean, he got super philosophical too. Like, just like Bitcoin saving the world and all kind of. There was a lot of alpha
it to the
there,
kids,
but
man.
Yeah, he was super philosophical too.
Okay, we hit on this pros and cons, perpetual preferred stock compared to the debt. Ben, you absolutely tackled that one. Negative interest rate, we tackled that one too. Total BTC and BTC yield for Q1 25 and end of 25. I mean, shoot, total BTC added in Q1 25, it could be pretty big. I mean, if we see convertible debt issuances and the preferred stock, I don't know, let's just say they raised 10 to 12 billion in Q1, we could see them add another 100,000 Bitcoin in Q1. hard to conceptualize. I mean, a lot of things going on, potential strategic Bitcoin reserve, all that jazz. But it could be it could be very interesting. Could be very interesting. All right, what happens to MicroStrategy if there's a massive dump, 60% drawdown? I'm going to say that MicroStrategy goes down. If there's a massive dump in Bitcoin, I'm going to say MicroStrategy probably also goes down. That being said, there are many people that are holding the equity, and there's passive buyers that are buying the stock at any price. So which is also reflexive to the downside. Yes, I get that. But yeah, I guess it just kind of depends on size, scale, where we're at in the cycle, all of these other things. If people are rolling out, opportunity cost of capital, yada, yada. Good to not rely on your equity portfolio. Okay, I'm going to stop there. That's all I got. I mean, we're at 2 hours and 10 minutes. My mouth is dry. I've had plenty of whiskey. We've talked about so many things. And I mean, so many things have happened in just in the last 21 days. I was just like, Jesus Christ, can we get a break on like things to talk about? Just, we had our last call and this, the share vote on 10 billion shares. And then, everybody on X thinks that Saylor's going to ATM issue 10 billion shares. Like, what idiots. Like, do you think the Saylor's going to nuke his own stock? Like, he's the majority shareholder. He's got 49% of the stock. Like, or 49% voting rights. He's got 12% of the stock. Like, he's not going to nuke his own equity position. Like, just read. Just learn about business stuff. Yeah, it's crazy.
That was his point, though, right? People catch a headline, don't scratch any further under the surface, and therefore you just see, well, there's only 241 million shares right now, and now they want, 10 billion.
Yeah, it's just crazy. I mean, it's just so stupid. Like they
people don't even realize that. Like, my opinion, you should probably be trying to get more shares than that, because it doesn't actually accommodate all that many splits in the stock. Right. And so if you're trying to keep that share price lower so you can keep the liquidity really high, like he couldn't do, they just did a 10 for 1, right? He couldn't even do 2 of those.
2 10 for 1s.
Yeah. So, I mean, it's really not all that much. So people are acting like this is the most ridiculous ask of all time. And I'm going, it's a pretty conservative ask. Like, he's got enough for, like a 5 and maybe a couple 2s, right? Like not even that much. So yeah. Watch for your votes. I mean, reality is it's going to pass, right?
It's going to pass. It's sure going to pass.
He's got 44%, I think, are the super voting rights right now, or 44% of the vote. And typically in these votes, you'll get anywhere from, call it 20% that don't vote their shares. That just typically happens. So they could pass the vote with just the super voting rights on their own, most likely. But I think you're going to see a huge show of support for this. So I think it'll.
So I need to contact my my platform to make sure that I can vote.
Yeah, I haven't seen mine come through yet. I saw that on Interactive Brokers. They've been coming out already, so I'm expecting it here within the next few days, but I haven't seen it yet.
Yeah,
cool. Thanks.
Yeah, and you're probably getting an email. Almost every time I've voted on something, I've gotten an email. Yeah.
Yeah, if you don't see it by probably the middle of next week, then I'd probably call and go, hey, what gives?
Good deal.
Maybe your broker's a bear and they want to vote him for you.
Right.
They don't want to get diluted.
Good God. Just idiots everywhere. Oh my God. Last one. I'm just going to share my screen. This is what LA looks like right now, which is just totally sad. Oh my God. Totally crazy. And like Pacific Coast Highway, like all the west side of Pacific Coast Highway, we're talking like 5, 10, $15 million homes, like all wiped out. This could be bigger than most hurricanes, like in terms of size and scale, like insurance event, like $50 billion, $100 billion. Like this could be a really, really massive, like wildfire event. Crazy.
Yeah, I think it was Corey Clipston that posted, he posted some of the stats from like the last most devastating fires, and like the biggest one before this burned down like 700 houses, and this one's already burned down 1,000, I guess, which is just nuts.
Damn.
I mean,
that's 10 billion.
It's scary stuff.
If it's burned down 1,000 in that area, that's a $10 billion event.
Yeah,
for sure.
Yeah, this is
easy.
Unreal.
And which 10 billion, just to put it in perspective, Paradise Fire in 2018 was like 20 billion insured loss. 20 billion. But that was 14,000 homes, 15,000 homes, and like a 99%, like a 95% burn ratio. Like everything burned in the entire area. Like there's just like no escaping it. But like over here, I mean, if you 2,000 houses burn and they're $15 million, like that's a $30 billion event. To put that in perspective, like hurricane, this hurricane that we had this year will probably be like $5 or $6 billion. And then Hurricane Ian, I think, was about $50 or $60 billion. So hurricanes definitely can be larger, but I mean, this thing is still raging, and the wind is like crazy, super bad.
What's this going to do to the insurance rates out there? Like, this is almost going to make it
nuked.
So expensive for that people,
nuked.
Even rich people, aren't going to be able to afford to live in LA anymore. I mean,
here's the thing:
crazy.
Rich people were already not able to afford their insurance in LA. Like people, honestly, the saddest part about this whole thing is that I bet that 25 to 40% of the homes in that area are uninsured.
Oh no.
Yes. And that's because it's fucking rich people. And these rich, like if you have a $15 million home in Pacific Palisades, it's probably not your only home. You probably have other homes in other places, right? Like the people that buy $15 million homes, they're generally not the only home. And the price of insurance has gone so astronomical. We were talking like, one, it's either not available. Two, it may be $200,000 a year for your insurance. And it just becomes to a point where you're like, well, fuck it. I'll just self-insure. All right. I'll just park that $200,000 myself and just self-insure. Like that's crazy. But the problem is they like totally underestimate the probability of an event occurring like this. Alternatively, there's this thing called the California Fair Plan in California where they're like the insurer of last resort. But the California Fair Plan will only insure primary homes up to $3 million. So you can only get coverage up to $3 million, even if you have like a $15 million home. So basically they'll cover like the first 3 million. And the sad part is like, there's no market for excess, the Fair Plan. The problem is the damage ratio is 100%. Like if fire touches your home's gone, just like the picture I showed. Whereas like a hurricane, if like a hurricane hits your house, like your damage ratio could be 30%, 40%, 50%. Like you might lose some shingles and break a couple of windows, but the home's still there. But it's just completely different for wildfire, where it's just like so volatile, right? So poppy, which, and this California is a mess. California is a mess. Like most of the insurance in the market, the insurance regulator controls rates. So if you're an insurance company, you want to raise rates, you got to go get them approved by the insurance regulator. And the insurance regulator is an elected position. Think about how fucked up that is.
Jeez.
So if your insurance regulator is an elected position and you want to go raise rates, guess who wouldn't like if they got their rates raised? Voters. So if your insurance rates go through the roof, guess who the insurance commissioner doesn't have a job anymore? So his whole job is to like keep rates low, like keep rates down. And so there's been a lot of bullshit happening behind the scenes trying to prevent insurance companies from charging like what they actually should be charging for the actual risk exposure. And that's resulted in literally hundreds of insurance carriers leaving the state and saying, fuck you, I'm not going to write any more insurance in the state because it's not worth it. I can't do it. Like I can't get the money that I need in the front door to pay for the reinsurance in the back door. And here's how crazy this is. Think about the reinsurance market. The reinsurance market is unregulated. There's no insurance regulator in the reinsurance market. So the reinsurance market can move their rates really fast. While the insurance market is like struggling, right? Like there's like a cap on the insurance market, but the reinsurance market's like, well, you just hammered me with a $20 billion loss. I'm going to charge you 400% more, and I'm going to move your retention up by 20%, 30%. So instead of like an insurance company having a $5 million retention, they might have a $25 million retention. And all of a sudden, your entire business plan is upside down. It doesn't work anymore. And so I had clients literally going out of business because they had a wildfire on their event, like on their portfolio, totaled their reinsurance program. And they're like, well, holy shit, the cost of my reinsurance just went up 400%, and then my retention just went up 400%. My business model doesn't work anymore. Like I literally can't buy enough reinsurance. I can't get enough premium in the door. At like it's just like it doesn't. I can't do this for another year. And it's just like it's totally insane. And the other thing the state of California did, they made it so you couldn't include reinsurance cost in your rating algorithm. So you couldn't insure, dude. It's so crazy. It seems made up. It's just like
How's
it's
that
like
work?
so wrong. It's just so. It's like, oh my god, you don't understand like any math. Like you just don't get any math. Yeah, like they weren't allowing you to like if your reinsurance cost went up, you had to like you weren't allowed to put it into your rating algorithm. Just totally insane. And then they said, okay, well, now in 2025, you can put reinsurance costs in your rating algorithm, but you have to have 85% of your exposure has to be high risk wildfire. So they're trying to like make people write wildfire risk to include the reinsurance costs. But then everybody that is looking at this is saying like, well, if I write all this sketchy shit, I won't even be able to get reinsurance. Like I can't even buy it. Like the market won't even give it to me because they know it's risky. So it's just this like stalemate happening in California where everybody's trying to get things and nobody can move and nobody can price things well. And this event is just going to turn it even more upside down, like on its head. It's like, it's bad. This is really
Is this
bad.
going to rocket rates in localized areas or for the whole state? Because I mean, there are fires
the whole
up
country,
in Napa and all
the
over
whole,
the place.
the whole country,
Whole country.
whole country. Yeah. I mean, this is like, when you have an event like this is largely not an insured event. Okay. This is a reinsured event. When you have a 50, 25, 50, $100 billion loss, that's a reinsured event. And so when you have a reinsured event, the reinsurers have to, when they pay out the loss, they're going to go recoup that capital everywhere. They're going to recoup it in Florida. They're going to recoup it in the Midwest. They're going to recoup it everywhere. So that's going to drive reinsurance costs for all capital and the entirety of the insurance market. So it's going to be felt everywhere. But like the biggest problem in my mind is like just insurability period in California. I think a lot of California is just uninsurable. And it's like, I think a lot of the middle America that lives next to rivers is also uninsurable, but people keep building there as well. And insurance companies allow them to continue to build where they live. So yeah, I mean, this whole thing is just totally nuts. Totally nuts.
Hey,
Anyway,
Jeff.
yeah.
Do you know what, just in the comments, have you guys ever looked into catastrophe bonds? What is that?
See there. Yeah. Cat bonds. Yeah. Cat bonds are interesting. They generally sit really high on reinsurance towers. This brings alternative capital into the market in a different vehicle. So the most reinsurance towers that insurance companies buy, they buy as much as they can from traditional reinsurance markets like Swiss Re, Munich, Lloyd's of London, et cetera. And then they may buy like a catastrophe bond that sits like even further out. These catastrophe bonds are priced based on insurance in these catastrophe models. So you can take Monte Carlo simulations and run 10,000 simulations over a portfolio and get a probabilistic distribution of loss across a curve. And you can effectively price a layer of reinsurance that sits really high, really far out in the tail. And those products are like tradable in a secondary market. They're generally not tradable to the public, but just like a private secondary market. And it's just a different way for other capital to access the reinsurance exposure. It's a unique market. It's just niche, just super niche, but it's growing. It's growing pretty drastically. And I think there's a lot of synergy there with blockchain and crypto. I think like catastrophe bonds, bringing new capital into this marketplace could really help, bringing different insurance infrastructure into this marketplace using blockchain and thinking about like equity and equity and insurance, which I think could be interesting. A lot of things that what most people hate about insurance is that you pay into it and you could pay into it for 20 years and then get non-renewed and you got nothing. And that's the thing that most people hate. I think Rob Schneider, he posted on Twitter, is like fuck insurance. Like I've had State Farm for 20 years and like, I don't know, maybe his house burned down or something. It's like, well, it's just a business decision. But I think some interesting things to think about are like maybe a future where when you pay your insurance, you actually have equity. Like there's equity in that position. Maybe that's held in Bitcoin or something like that. And I think there's a whole new way to think about like the world of finance using these other products. I think somebody says insurance market will have to pivot. They absolutely have to pivot and they just don't get it yet. Most everybody doesn't get it yet. Yeah, I mean, the state of the market's crazy. I'm long Pacific Northwest. That's all I got to say. Long Michigan, long Pacific Northwest, long Northern Hemisphere, like long 45th latitude. Get north. I'll tell you where there's not wildfires in January. It's fucking Washington or Michigan or New York.
Yep.
So anyway, all right, 2 hours, 25 minutes. I got to go walk my dogs. Thanks for the time, everybody. Appreciate it. We'll catch you next week. Peace.
See you guys.
See ya.